Hello and welcome to the monthly recap. This is for the month ending today, Tuesday, March 31st, 2026. I hope you all had a wonderful month. No dogs in the background today. Last time I had a little Archie in my lap, even. They are all three at daycare. They are extremely spoiled dogs. So that's where they're at today. Hope you all had a wonderful month. March was a crazy month. And I say that all the time, but how can you look at what happened in March and say it was anything other than a crazy month? Kind of shocking. So in last month's monthly update, it was on Friday, the 27th of February, and I said, hey, what surprises is March going to have in store? In February, it was Venezuela. In March, maybe it's Iran or Cuba. And literally the next day, it was Iran. Literally the next day, February 28th, it was Iran. I did not realize I had these powers. I am so sorry for wielding my powers so lackadaisically. I apologize. I had no idea I wielded that kind of power in my uh, quiver. So sorry. We're going to be talking about the conflict in Iran. We're going to be talking about the Strait of Hormuz importance. Very important choke point bottleneck in the world. You could argue it's one of the most, if not the most important bottleneck or choke point in the entire world. So I'm going to be talking about that and why it's so important. Inflation came in a little bit warmer than expected in some arenas. That's not great news for what lies ahead because of see bullet point number one, the Strait of Hormuz, which again we'll talk about. Labor market showing signs of weakness. There was also a Fed meeting. It was one of the larger Fed meetings of the year. There's four large Fed meetings of the year, summary of economic projections, where the Fed doesn't just come out with what they decide for rates, but they actually have to tell you why they made that decision, where they see things going forward. So talk about that. Almost equally as important, the European Central Bank came out and said some stuff that has led a lot of people, a lot of investors, a lot of economic experts to predict that there's going to be a rate hike coming from the ECB. I'll talk about that in a little bit. And then mortgage rates ended the month around 6.49%. Last month, when I sent out this update, we were below 6%. They've gone up a full 0.5% to 0.625% in the last 30 days, which is rough. Or to quote Harrison Ford's character from Shrinking, woof, it was not good. So talk about all that. Lots to get into. Happy St. Patty's Day was also the first day of spring. And at least the weather's nice. It's beautiful outside. So yeah, frown upside down. Let's take a look at what's going on. So I'm choosing my words very carefully here, okay? You know me, I try to be as apolitical as possible, and it's really hard to do that when it comes to something like military operations in Iran. I'm choosing that language verbatim from the current administration. They do not want to call it a war, okay? And the reason they don't want to call it a war is because if you call it a war, it requires congressional approval. If you call it a military operation, all of a sudden it's a little bit more of a gray area, and that's what the administration is really leaning heavy into. Is it's not a war, it's a military operation, much like there was military operations last year when they attacked Iran's nuclear sites, or a military operation when they went in and they stole the leader of Venezuela. I guess that's a military operation, right? So they're using this very much to their power and their leverage, because they can't call it a war. That would require congressional approval. Anyways, again, I try to be as apolitical as I possibly can. I think you all know that by now. I will continue to try to do so as best as I possibly can. So, February 28th, the second supreme leader of Iran, the Ayatollah, was killed in an airstrike, joint airstrikes between the U.S. and Israel. He was 86 years old at the time. He has been replaced by his son, who is the now new supreme leader or Ayatollah. His son is 56 years old. So we traded an 86-year-old for a 56-year-old. Over 40 Iranian officials have been killed since the operations began. Questions still linger about the objectives and goals. They continue to ask the administration, what is the end game here? What is your goal? What are you trying to achieve? And the responses they're getting are pretty vague. To make things even more complicated, Iran's government is structured in a very complex way. It's a mixture of elected and appointed officials, some political, some religious. It makes diplomacy rather tricky. It's very hard to kind of cut to the chase and get to the one person who can actually really enact any actions or resolution, which is ultimately going to be the Ayatollah himself. So that's what's going on in Iran, as you all well know by now. Now, the Strait of Hormuz. It's in the news a lot. I think it's in the news a lot more for me because it impacts interest rates so much. So the Strait of Hormuz, as I mentioned, it's a choke point, it's a bottleneck, and it's on the southern coast of Iran. Okay, it's about 104 miles long. At its narrowest point, okay, the shipping channels are only a couple miles wide. Yeah, they're wider than that, but the shipping channels where they can actually send a tanker down through, at its narrowest point, is literally only a couple miles wide. That makes it extremely easy to really kind of crack down on traffic that's occurring through there. And that's important because over 20% of the world's oil and liquefied natural gas flows through that strait on tankers. Okay. And yeah, the US doesn't get as much of its resources from there, but China, for instance, gets 45% of its oil from that strait or from Hormuz. So it's extremely important. Oil prices are around $111 a barrel for Brent crude, which is really what they're talking about here. It was closer to like $70 a barrel before the conflict occurred. Okay, so significant increase in the cost of oil. The Strait of Hormuz, as you can see it right here, it is really a very small area where so much traffic really flows through there. Uh, Traffic through the strait has slowed to a crawl, unfortunately. Traffic is down. At one point, it was down to about 6% of normal, okay, which is extremely small. Certainly not going to leave any issues or concerns with some of the oil prices, energy prices flowing through that strait. There are some improvements there. A lot of countries have been striking deals, and they've been able to start to negotiate better prices for, or sorry, not better prices, but their ships to be allowed to pass through that strait. But still, it's only about 1/5 or 20% of the overall traffic that typically flows through the strait. Okay. Now, I joke that chaos in the world is good news for mortgage rates. Okay, chaos in the world is typically good news for mortgage rates. When there's chaos in the world, people take their money out of stocks, which are a riskier investment. They put it into bonds and mortgage-backed securities. Your rates, mortgage rates, are a type of bond, right? It's a type of promise to pay. Well, chaos in the world is good news for mortgage rates unless, and it's a big unless that chaos is seen as inflationary. And sure enough, 20% of the world's oil flowing through a bottleneck that is now being controlled by Iran, that is inflationary in nature. And that's why I've seen such a significant increase in the cost of oil. This doesn't just impact, I had a member tell me recently, I went to the gas pump and yeah, it was a little bit more expensive, but it wasn't that much more expensive. Well, yeah, unfortunately, it doesn't just affect your car filling up your gas tank at the gas pump. It affects everything that has to get shipped. That's your produce at the grocery store. That's anything you buy from Amazon. Every single thing is now exposed to the increase in cost of shipping. It means it impacts literally everything, okay? Which is why it's so inflationary in nature. Mortgage rates, unfortunately, they've gone the exact same direction as oil. Oil's skyrocketed and the rates have jumped as well, around, again, 0.5% to 0.625% higher than they were just a month ago. As far as inflation goes, a couple funny comics here. Both right on point with Easter coming up here. Inflation then gives Easter bunny's giving the little girls just a small little basket. Oh my gosh. Anyways, all right. So you gotta smile and laugh to keep from crying, right? Right. So let's talk about inflation. A lot of these numbers actually were not terrible. Okay. So consumer price index, which is a consumer level inflation, for the headline, which is all inflation, for February, it came in up 0.3%. Okay, yearly remained stable at 2.4%. The core came in at up 0.2%, which is a very tame number. Yearly remained at 2.5%. So consumer level inflation for February basically stayed the same. Okay, 2.4% on the headline, 2.5% with core, which is the volatile food and energy removed from the equation. Personal consumption expenditures, PCE. This is the Fed's favorite measure of inflation. Up 0.3% for January, not terrible. Yeah, the yearly number increased slightly to 2.9%, but still not a huge increase. Core rate increased 0.4%. That was a little bit hotter than expected. The yearly increased only 0.1% to 3.1%. Now, all these numbers, yeah, they're not great, but they're not terrible. They're not, blockbuster crazy numbers. Here's the problem. This is for January, the PCU is for January, and the CPI is for February. That's the problem, okay? None of this started to happen until March. So the real question is, and the reason why traders were not really happy about this was because, oh no, this is before things get hard. And they do expect things to get significantly worse with the March numbers going forward. So all because of inflation, all because of oil prices, it's going to get kind of ugly. The core rate, it removes the volatile food and energy from the equation, right? And there's a reason they do so. But you can't remove the value of energy from everything. It does still permeate and affect other things as well. Like I said, it impacts anything that has to get shipped. Here's the other downside: producer price index, PPI. PPI has been on a pretty rough run of it lately. Producer price index is wholesale inflation. Inflation as businesses feel it. Okay. The headline for February came in up 0.7%. That's a huge number. And the core rate came in up 0.5%. That's also a pretty big number. The yearly for the headline increased 0.5% to 3.4%. It increased on the core from by 0.4% to 3.9%. These are huge numbers. And it comes on the heels of another really bad set of numbers in January for PPI. So the concern is, look, PPI does not always mean consumer level inflation. Businesses can simply shrink their profit margins, right? They can stockpile goods, that kind of thing. But over time, PPI does tend to be a leading indicator for consumer level inflation. Eventually, businesses start to pass that increase in cost of goods off to consumers. So the concern really is not so much about these numbers specifically, but it's what lies ahead. Okay. And that's why the markets are really not happy about these numbers. On the jobs front, the Bureau of Labor Statistics, BLS, okay, they showed 92,000 job losses in February, not job gains, job losses, 92,000. And BLS tends to be the optimistic one. Like, oh no, what does that mean is ahead of us? They also revised the December and January reports down by a combined 69,000 jobs as well. The unemployment rate did tick up to 4.4%. ADP, which is the more realistic number historically, they showed 63,000 job creations in February. That actually exceeded expectations of 50K. However, it's still a very tame number. So inflation is picking up, and it's likely going to get significantly worse before it gets better. Jobs, yeah, those are not looking so great either. Now, it is worth noting on the inflation front, because it is so important, right? That just as quickly as oil prices rise, they can come down. It will take a little bit longer, so probably not just as quickly, but they will come down over time. Okay, so people will start to cut corners. People will start to, be a little bit more conscious, carpool, public transportation, whatever the case may be. Honestly, EVs will probably, become a little bit more popular as well, as people try to look to save some money. But that will come down over time. Okay, so yes, this is not great, but it will not be around forever. Oil prices will eventually come back down, and inflation will come back down as well. So again, frown upside down. All right, let's talk about the Fed meeting. So they have several meetings throughout the year, but the biggest ones are the ones I put in bold. Okay, these are the ones associated with a summary of economic projections. March 18th was one such meeting. Okay, it is, like I said, not just a meeting where they come out with a rate decision, but they actually have to show their work. Why did rates go where they went? Where do we think things are going to go going forward? So what happened at that March 18th meeting? Fed left rates unchanged. The Fed funds rate is in a range of 3.5 to 3.75%. The Fed was more unified this time, and that's an interesting develop. They only had one dissenter. Okay, they only had one dissenter, and in previous meetings they've had multiple dissenters. What does that mean? It means more of the Fed was in lockstep, and when they were in lockstep, with the decision of leaving rates unchanged. That means there's many more Fed members who are fine with not cutting rates, at least in the immediate future. Okay, lots of concern, you can kind of guess it, was voiced over the war in Iran, the conflict in Iran, whatever you want to call it, and the uncertainty with energy prices. Okay, they all said that time and time again. They also, and we'll see this in a little bit here, inflation. They are concerned about inflation, and they updated their projections on inflation as well. We'll take a look at that in just a couple slides. Let's talk about the Fed funds rate projection real fast. So as I mentioned, with the summary of economic projection means they don't just have to make their decision, but they have to show their work. Where do they think things are going to go going forward? So every single one of these little blue dots here is a Fed member's opinion, okay? And this is for 2026, 2027, 2028, and then longer term, okay? Well, this is where they currently are at, okay? They are currently in this range of 3.5 to 3.75%. Okay, so this is where they're currently at. And right now they've got 2, 4, 6, 7 members who are currently of the opinion that, hey, no additional rate cuts are needed. Now, the good news is nobody is predicting a rate hike. Great news there, because we're going to be talking about the ECB in a little bit, and they're not of the same opinion. Okay, then we've got 7 members who are also thinking that there should be one rate cut. We've got 2 thinking 2 rate cuts. another 2 thinking 3, 1 thinking 4. You can kind of guess who the dissenter would be. It would be the one who's way down here who wants to cut rates right now. But for the most part, the Fed was in lockstep. They were of the same opinion that, hey, they were fine with leaving rates unchanged. They don't think they see a need to immediately reduce rates. The prevailing opinion is still for 1 or more rate cuts this year. We'll see. Everything was looking really, really good. There was some reasons to be optimistic on inflation, and then Iran happened. So, put it in the blender. Everything got shaken up really quickly. Let's talk about inflation, which is pretty fascinating stuff here. So, this is headline. This top chart is the headline, which is all inflation. This one is the bottom one is the core rate when you remove volatile food and energy from the equation. Okay, so these light blue bars are the current projections as of the March meeting. Okay, this little dotted line is the opinion from the December meeting. So they show the dotted line is where December is, and then they show the blue boxes, the blue bars, where they are currently projecting. As you can see, they've shifted quite a bit. So in the December meeting, they were expecting, headline all inflation to be around 2.3 to 2.4%. Now the majority opinion is 2.7 to 2.8%. That's a huge change. Doesn't feel like it's huge to change. In my world, that is a huge change. The Fed is admitting Iran has really made things very much less uncertain, or very less uncertain. So we are thinking inflation is going to get warmer in the near term. When you look at the core rate, when you remove volatile food and energy, it's not quite as significant because we're removing the energy component to that. But they are also acknowledging that, hey, even when you remove the energy component, there's still energy components. There's no way to get around it. Everything costs money to ship, and that's affecting the price of literally everything. Okay. So again, they're projecting back in December, somewhere in the 2.3 to 2.6 range. Well, now they're of the opinion that it's going to be close to the 2.5 to 2.8 range. So even that core, even when you remove energy, it still impacts inflation on a very basic level. So this is the Fed meeting. Okay, this is our Fed. They left rates unchanged. They're thinking inflation is going to get worse. They're showing a little bit more patience because of the concerns about inflation. Okay, how about the ECB? So the European Central Bank, okay, they make monetary policy for 21 countries. It got caught up here. There's number 21 here. 21 countries in Europe. Okay. The ECB president, Christine Lagarde, she came out and she said, and I quote, if the shock, she's referencing the oil shock, the price of energy, if the shock gives rise to a large, though not too persistent overshoot of our inflation target, some measured adjustment of policy could be warranted. What the heck does that mean? Typical Fed speak. Okay. Typical Fed speak, it means the ECB is likely going to hike their equivalent of the Fed funds rate. Okay, and they're likely going to do so at their next meeting. And there's some forecast calling for multiple ECB hikes in the near future. It's no surprise Europe is a little bit more reliant on those energy sources than the U.S. is. And because of that, they're saying, look, this is going to increase inflation and we're going to have to adjust our policy. Adjust our policy means look to hike rates instead of, again, the U.S. is still thinking about cutting rates maybe 1 to 2 times this year. ECB is saying, yeah, no, we're going to have to hike rates most likely, all because of Iran. Okay. All right. So looking ahead, you guessed it, more questions about Iran. So what's going to happen with Iran? Right now, we're in the middle of a temporary pause of escalation of conflict because we're trying to see if we can make any headway. But we also have troops now in the vicinity, so it's still rapidly developing. It's going to be a very volatile situation until it's not. Inflation and jobs going to continue to be closely watched. The labor market looks weak, which means the Fed should want to cut rates, but they can't cut rates so long as inflation is being persistent and elevated. So those two, ideally, they'd be able to start cutting rates a little bit more aggressively. But inflation, and that's only going to get worse, okay, unfortunately, at least in the short term. Long term, not concerned. Oil is temporary in nature. Spring buying season is heating up. Do rates impact things? Again, anecdotally, they don't seem to be impacting things on my end. There seems to be plenty of ample buyers out there, and this uptick in rates does not seem to be deterring too many people yet. So that's good news. Dare I ask? I don't want to wield my power for evil, but what surprises does April have in store? So hopefully things will calm down and I will prove that it was a fluke and not my power that was being wielded and causing damage. I think that's it. I hope you all had a wonderful month. I hope you have a wonderful month ahead. If you need anything at all, let me know. I'm working. I'm available throughout. I appreciate you all so very, 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 very much. Thank you. Bye.